Florida buyers, are you ready? Florida is seeing a massive surge in number of homes that are piling up. We're going to take a look at what's going on in Florida right now. And this is a great indicator for buyers if you are an investor in Florida. My name is Orlando Hubbard. I am a real estate analyst, a wholesaler. I pretty much do this all day, every day. I look at markets, look at houses, buy houses. Now, let's take a look at this article that I found on Realtor.com about what's happening in Florida right now. Record number of homes pile up in Florida, making two major cities hot markets for buyers. If you are a buyer right now, now is the time. The number of homes piling up on the market in Florida has hit record highs for 2 months. Record highs. We're seeing crazy amounts of homes on the market right now. Sellers, there's a massive sell-off right now. Sellers are getting impatient of interest rates going down, or they're getting impatient, or they may need sudden life changes that need to happen, causing them to get ready to sell faster. Two cities in particular are becoming hot markets for buyers as prices fall dramatically. So sellers are realizing that I cannot just mark up my house if I expect to sell it in a reasonable amount of time. In February, 168,717 homes hit the market in the Sunshine State, the highest number in the history of Realtor.com data, going all the way back to July of 2016. Nearly 40% higher, 14% higher price drops than a year ago. I don't like to call it a crash, but I definitely like to call it an opportunity. This is an opportunity for Florida buyers and Florida investors to pick up houses at a reasonable price now. Orlando topped the list of Florida metros that saw the biggest gains in inventory, with a 43.8% surge year over year, followed by Cape Coral with 42.7% and Miami with 39.2%. I think that obviously, especially in areas like Orlando and Miami, homes are getting too expensive to keep up with. Sellers are having to sell maybe to find cheaper homes, maybe because of life events, whatever the case may be. But this is the time for investors. For sale home supply has climbed annually in the state since May 2022, but have only exceeded pre-pandemic levels since mid-2024, says Realtor.com senior economic research analyst. High home prices and mortgage rates have stifled demand in the state. So demand is decreasing, leading to a buildup in home inventory. And not a lot of people are wanting to, which again, the home prices are too high for sellers. Sellers are like, man, I cannot afford this home anymore. But also people who are wanting to buy a house, they're just looking at it like, I can't afford to right now. We're definitely in a housing crisis in that way. I'm not an alarmist, but I do know that we're in an overinflated real estate market right now. The February upswing followed January's historic boost in inventory, which saw 157,221 homes on the market across the state, a 33.1% year-over-year increase. This was the highest number ever recorded by Realtor.com to date, before it was surpassed by more than 100,000 listings a month later. So let's look at the cities that emerge as hot markets for buyers. If you are a real estate investor, a buyer, listen up. This is your time to shine. This is your gold. As inventory surges and prices plummet, two Gulf cities, Sarasota and Bradenton. I just looked at a deal today in Bradenton. The seller was still asking a little bit too much. It was pretty much asking retail, but that's, yeah. They're becoming decidedly more buyer-friendly. Home shoppers in Bradenton and Sarasota are in for a treat with climbing inventory, falling prices, and longer time on the market. Whenever we see long time on the market, sellers get impatient. They have to drop their prices. They're like, something is not right. I either am priced too high, people cannot afford what I am expecting, so I need to drop my price. This is the best time for buyers, whether you are just wanting to be a homeowner or you're an investor, to come in and say, and not even just accept the price that's dropped to. Start being able to negotiate even more, because we're seeing record times of houses being on the market, of supply being on the market from a month to month standpoint. Houses, I believe, are in the 50 to 60 day range. 60, something like that, something like that in that range, where the houses are sitting on the market longer and longer. This is an amazing time. Now, the January report from the Realtor Association of Sarasota and Manatee closely mirrors the latest data from Realtor.com, highlighting a drop in median sales price. A drop in median sales price and an uptick in finalized or closed sales, suggesting the market is softening. Let's look at Bradenton. Bradenton, a city of 57,000 residents located south of Tampa. Median list prices have been in a steady decline. They've been declining in March 2023 after peaking at $549,000. That's a pretty insane median sales price, $549,000 in June 22. That's crazy. As of January of this year, a typical home in Bradenton cost $432,000. Wow. So a 100+ K difference, 100+ K drop in prices from a year-over-year standpoint. Are you kidding me? Wow. More than 100,000 less than half a year ago. At the same time, let's look at this article. At the same time, residential properties in Bradenton lingered on the market for 67 days in January. 67 days. So sellers were putting, a lot of times what you would get is a lot of sellers who put their houses on the market and they go high expecting people to come in and negotiate. But what sellers always do, and they get it wrong here, is that they overprice their houses based on what Zillow said, what they saw on Zillow, what their neighbors sold for, whatever the case may be. And they go dry. They go dry and they go on the market for 67 days like this. We have high interest rates. This is something that sellers, they're probably considering, but they don't fully understand the impact of what's happening right now. High interest rates. Inflation is happening right now. And you get these sellers who are just a little, not naive, but at the same time, they're wanting the most and they're expecting the most while giving the least. You know what I mean? They're not giving any type of leeway. So now houses are sitting on the market in these types of areas for 67 days, 3 days more than a year ago, and more than 40 days longer compared to the height of the COVID-19 pandemic. So as of January, the number of for sale listings in Bradenton was up 1,900 from 1,600 during the pre-pandemic era. So again, amazing time if you are an investor in Florida. In the city of Sarasota, which sits on the Gulf Coast south of Tampa, median list prices fell almost every month from November 2023 to January 2025. The median list price tanked every single time. Sarasota is a great area, by the way. The median list price reached a high of $725,000. Like I said, great area, great, amazing area, amazing houses if you can get them in July 2023. But this year, it shed $150,000, settling at $575,000. So we're definitely seeing a huge, all we're seeing really is just a huge correction. We're seeing a huge correction and in sellers' minds and in sellers' understanding of what really is happening in terms of interest rates. Everything is kind of catching up to them. Homes in Sarasota typically stayed on the market 67 days as well. So that's a record as well. According to January report from RASM, in the surrounding Sarasota County, single-family home sales grew by 6.8% in January year-over-year with 520 homes sold. Now, the townhome, I've been hearing a lot about this as well. Townhomes and condos, it seems like they're in a crisis there as well. The sector is cooling off. You see a lot of alarmists that are pretty much saying like, hey, we're in a condo crisis here in Florida. Both Sarasota and Manatee counties lingered on the market for longer than before and were more affordable than a year ago. The number of townhomes and condos shot up to 2,463 last month, while the median sale price plummeted 17.4%. Excuse me. To $347,000. Wow. So there is, like I said, not to say a crash, but a correction for sure. And it's hitting Florida. I believe that it's going to hit Austin as well. It's going to get hit all of the hyperinflated markets. It's going to hit California as well. A lot of the cities in California, San Francisco, San Jose, all of these hyperinflated areas that are seeing these crazy median sales prices go through the roof just because the inventory is so low. I believe that as we move more and more into these, people start to realize that we're not going back into a 2% interest rate, a 3% interest rate, a 4% interest rate. We may drop back down to maybe a 5 and we may stay around that 6-ish range. They're going to realize that, okay, there's no going back. Now the market starts to correct itself. Now I'm not saying we're going back to 2008 all over again. I think we learned our lesson in that way, but I do believe that the market will start to correct itself and sellers will begin to start selling their homes at a discount, which is a great opportunity for investors like myself, like for you who invest in Florida, who I look at homes all across the nation with my job. So amazing time if you are an investor. And if you are a seller, it's not a doom and gloom situation. It's just the market correcting itself to get back to what it really should be and not this hyperinflated madness that we are seeing right now. So that's all I have. Also, if you would want to know about what's happening with Doge and how they're taking on Section 8, if you're an investor in Section 8, you definitely need to check out this next video. I think excuse me, there's some valuable information in that video for you. Until next time, peace.